Welcome back once again, and before we went on the break, we're going for the summaries. And Ghana has been ranked 103rd most economically free country in the world in the latest Economic Freedom Index. Plus, PIAC reports highlighting some 13.5 million dollars actually wrongfully paid into GRA's account. We have these and many more in our summaries for today.
Following the change of name of Barclays Africa Group to Absa Group, Barclays Bank Ghana has announced it will be renamed at a later stage, subject to regulatory and other approvals in Ghana. A statement issued by Nana Esifua Boyson, Director of Marketing and Corporate Relations at Barclays Ghana, said, until then, the bank will continue to trade and operate under the Barclays brand in Ghana, even though our parent's name has changed to Absa Group Limited. Ghana has been ranked 103rd most economically free country in the world out of 159 affected by the survey. This was disclosed by the resident fellow of the Fraser Institute, Fred McHammon, during a presentation of an overview of economic freedom of the world at an Imani-organized program in Accra. The survey evaluated key pillars of the economy for all nations, ranging from judiciary, taxes, size of government, credit regulations, labor regulations, gender disparities, and trade freedom, among others. The European Union and Japan have signed one of the world's biggest free trade deals, covering nearly a third of the world's GDP and 600 million people. One of the biggest EU exports to Japan is dairy products, whilst cars are one of Japan's biggest exports. The move contrasts sharply with actions by the US Trump administration, which has introduced steep import tariffs. EU Commission head Jean-Claude said the deal underlined the win-win solutions offered by free trade.
All right, so I'll be coming back later during the bulletin, and we'll be talking about the budget. It's the most talk about this whole week.
And we have 2 days more to the presentation by the Finance Minister.
So when I come back, actually, that we'll be talking about some of the highlights and projections in the 2018 budget. Over to you.
Sandy, we'll pick it up from there. Plenty happening in the business space. The Bank of Ghana has suspended the 51% shares that investment firms Starmount, Bellstar Capital, as well as EDC and SIC Financial Services have in ADB. This makes ADB a fully government-owned bank effective today, July 17. This was after the Bank of Ghana cancelled shares acquired by the firms I've been telling you about in the bank during its initial public offering.
The first casualty of this action would be the board members nominated by Bellstar and Starmount to the board of ADB, which includes the current Deputy Managing Director of the bank, Patrick Kingsley Nina. Also, most decisions taken by these shareholders through its board members are also being reversed. The about 51% shares held in the bank would be reverted to the Bank of Ghana through its Financial Investment Trust, making the Bank of Ghana and government the owners of the bank. According to the central bank, it took this decision because Bellstar and Starmount did not follow the laid-down rules in carrying out this transaction. So can these investors take up the issue to court? That's the question we asked corporate governance expert and lawyer Joe Abwaji-Debra.
So if they should decide to go to court, that is their choice. But if you look closely at the law, unless there's a procedural issue that they are going to raise, if I look at the law and based on communication that has come forth in respect of those transactions, I think that they would have a major difficulty trying to undo this in a court of law.
But there are some who have also raised questions about the Bank of Ghana's action and whether these investors needed the regulator's approval in buying shares of ADB during the initial public offering.
Well, so this is what the experts are saying. They're saying it will be difficult for the company to get back, the companies affected to get back their shares because the purchase was not done properly. Turning to other news, Director General of the Ghana Stock Exchange, Kofi Anwan, says the decision to suspend trading of shares of ADB Bank on the stock exchange is to avoid the impact of negative information on trading. According to him, the announcement by the Bank of Ghana on Monday is likely to have an impact on the shares of ADB, hence its decision.
Basically, the announcement is saying that some liquidity support that went to the bank is the same money that was used to acquire those shares. Those liquidity support monies were not supposed to go into that purpose. So on the basis of that, they are annulling that transaction.
So is it on that basis that you suspended the...
No, our suspension of trading is to allow information to seep to all shareholders. When there's information asymmetry, market can be abused, investors can be abused. So between now and Thursday, close of Thursday, we believe that there will be sufficient time for the information to see, for people to see clarity. And on the basis of that, Friday morning trading resumes.
It's only 2 days. What's the assurance?
3 days.
3 days. What's the assurance that within that information will be?
Well, it's to allow for information, just as we are talking to you, just as we have given you copies of the press release, just as all brokers have been informed, and they will be educating their investors when they do come to them. We believe that that should be enough. So Bank of Ghana is saying that they gave liquidity support to an institution. That liquidity support was for specific purpose, and that specific purpose was not followed. On the basis of that, and on the basis of the act which empowers them, they have annulled that transaction.
So the GSC boss, they're explaining the decision to suspend the shares of ADB. Well, another quick development in the banking sector that we want to update you on. So, Jihad Bank, Sahara Bank, and Premier Bank have concluded talks that will lead to the merging of these institutions. Joy Business understands that the deal was closed earlier this month, and an official announcement could be made soon. We will be bringing you more on this story in our subsequent bulletins. Now, turning to Societe Generale's facts behind the figures today, the bank says shareholders of the bank have agreed to mobilize resources to support additional funds from the bank's income surplus for last year to meet the Bank of Ghana's new minimum capital requirement. Managing Director Yo Sionle says the process is expected to end by September this year. He spoke with Joy Business after the bank took his turn at the Facts Behind the Figures series at the Ghana Stock Exchange. Ebenezer Sabute has more.
The central bank's deadline for all commercial banks in the country to meet the new minimum capital requirement of 400 million Ghana cedis is gradually approaching. To this end, all the banks in the country are pursuing measures to get funds to meet the requirement before December this year. After taking its turn at the just ended Fact Behind the Figures, Managing Director of Societe Generale, Sionle Yu, said he's optimistic that all the measures put in place by the bank to recapitalize will be completed by September this year.
We are really willing to get there the soonest. This is why we've put in place everything in the bank to ensure that we will be there by end of September. The process is ongoing. As I told you, we have already carried out a first step, that was to convert part of our income surplus into the settled capital. 97 million is one is done, and for the remaining, which is 165 million, we have started the process, and we know that our main shareholders are ready to contribute, and they know the schedule. They know that we want to be there in September, so it's just a question of managing the project that will lead us there. But we have no doubt that we will be there.
He admitted that the new minimum capital will help banks to grow their financial strength.
More capital, more money, and they will be expecting more profitability. And within an environment where you have the interest rates dropping, the only solution you have is to increase your business. And in a well-oriented economy, this is possible. This is what we are working on, even by getting more market share.
The bank has a stated capital of about 235 million Ghana cedis as at June 2018.
Aviation now and government is being urged to look at innovative financing strategies for airport infrastructure in order to help drive down airport charges and taxes. The issue of high cost of aviation taxes and charges are among some major restrictions hampering the profitability and growth of aviation business within the West Africa sub-region. But speaking at the opening ceremony of the 12th Route Africa Conference here in Accra, the Director General of the Ghana Civil Aviation Authority, Simon Aloti, suggested private-public partnerships could be some alternative funding sources. Sheila Tamaklo reports.
The 12 Routes Africa 2018 brought together stakeholders and influential figures in the aviation industry to discuss intra-Africa connectivity and share knowledge on latest issues related to the industry. Among issues discussed were the high taxes, fees and charges, which are said to be hampering growth of air transport markets within the sub-region. According to Director General of the Ghana Civil Aviation Authority, the issue can be addressed by identifying alternative means of financing airport infrastructure.
Charges up to provide the needed infrastructure. But the question is, if your industry is a bit small and you provide infrastructure which costs the same everywhere in the world, if you have to put up T3 at this level, to be the same as in UK or in the US. Now, if you have an airport with, say, 50 million passengers using that terminal, if you spread the cost over the number of passengers, the charge per person will be extremely low. Whereas if you have an airport with 1 million passengers and you incur a cost of $300 million to provide an infrastructure, for the banks even to finance the facility, they'll need some guarantee that you can pay back. And this is through the charges, taxes. And for an airport with a low passenger throughput, these taxes tend to be a little higher. Now, the disadvantage is if your taxes are higher, it goes on the passenger ticket and becomes unattractive for people to fly to your country. And if the charges are non-existent or too low, you not attract the financing to provide infrastructure. And if you don't provide the infrastructure, your airport may not be safe, will not be attractive to anybody. So it's a vicious cycle. You need to create a balance. In some instances, for example, in Ghana, increasingly we may have to ask the municipal authorities to provide support in running some of these regional airports.
For the airline operators, bringing down the charges and fees will go a long way to improve their business.
Once taxes are reduced, basically fares will be reduced in order to pass it on to the passengers. Currently, we have government taxes which are very high, and not only government taxes, but again, taxes from other suppliers. And having a ticket fare to most of our regional destinations becomes extremely high. If you recall in the panel discussion, you realize that airlines are facing high competition, and we are forced to even shave our margins. But again, taxes still remain constant.
I find the benefit coming from reducing the taxes and this, which is attracting more traffic, especially the alternative traffic that coming with other types of transport. So by reducing taxes or by find a way to manage the taxes, let's say, or the charges, you can find a lot of traffic that coming through.
This year's 12 Routes Africa 2018 was hosted by the Ghana Airports Company Limited as a strategy to position Ghana as a leader in airports business and a preferred aviation hub in West Africa. Sheila Tamaklu for Joy Business.
Meanwhile, the newly constructed Kotoka International Airport, Terminal 3, is to undergo a final simulation exercise ahead of its official opening. The new terminal, according to the Aviation Minister for Aviation, is scheduled for commissioning later in October this year.
We are going to have two simulations, One where we handle about 1,000 passengers, pretend that they are traveling, receive their luggages, check them in, get their packages through the baggage handling system to make sure. Now, the baggage handling system at Terminal 3 is a very modern one, where once you check in, the system will determine where your luggage should end up. It's not like Terminal 2 where we carry it outside to the baggage makeup area and send it up. Now it is all going to be controlled by the computer and the baggage handling system. So we need to test all those things. So we have these major simulations coming up. We'll have two, and if we do them, we go through those trials and everything works well, then we know that we are ready to open the terminal.
You're watching Business Live. After this short break, Sunday is here with a conversation around the 2018 budget. Do stay with us.
Welcome back to Business Live, and as we eagerly await the presentation of the Finance Minister Ken Ofori-Atta's mid-year budget review, Business Live gives you a snapshot and examine a number of key board macroeconomic, sectorial, revenue and expenditure targets projected in the 2018 budget. And the statement also will look at the economic policy of the Bank of Ghana. I will be walking you through this with my in-house analyst and researcher, Philip Namfuri. Philip, thanks so much for joining us.
Thank you,
so let's start straight and tell us about the board macroeconomic targets in the 2018 budget.
Okay, so for the broad macro targets, if you look at the overall GDP growth rates, government projected for 2018 is 6.8%. Then we have the GDP growth rate less of oil. You know, they separate it. So overall GDP growth rate, and there's one where oil is out of it. That one is 5.4.
Okay, but it's on the screen now, so yes, you can monitor. Yeah.
Yeah. So then we have one where we have like average inflation of 9.8%. You know, right now inflation is at 10%. As of June 2018, we have fiscal deficit. That's the difference between government's revenue and expenditure at 1.6%. Then yeah. So that's the end period inflation. That's at the end of the year, government wants to see an inflation target of 8.9%.
Okay, so then let's move to the sectorial target in the 2018. Okay, what is it talking about?
Yeah, so the sectorial targets, we have three main areas: agriculture, industry, and services. Okay. And each of them has its own growth rate, you know. And if you look at agriculture, they are projecting 4.5%, industry 9.4%, and services 6.2%. One would argue that agri should have a higher growth rate because of the numerous policies they put in place, planting for food and jobs as one. Yeah, but you know, right now industry also, government is very heavy on industrialization. So we have a growth rate of 9.4%. Services comes in at 6.2%. So that's for the sectorial growth rate.
Okay, so the next is the revenue breakdown. Can we have how the revenue was done in the 2018 budget?
Okay, very good. So with the revenue, we have a split between domestic revenue, then there are further components where you have the tax revenue, non-tax revenue, and we have grants. And government was projecting a revenue of about 51 billion Ghana cedis, and you have a domestic outlay of 50 billion. So government wants to collect taxes within the economy amounting to 50 billion Ghana cedis. If you look at the grants, that's about 586 million. You see, it's a sharp drop. And this will resonate well with government's Ghana Beyond the Age agenda.
Exactly.
Where they want to shift away from taking monies from development partners overseas and stuff, and they focus heavily on domestic revenue.
For most people, the issue has to do with expenditure. Okay. So can we have a breakdown of the numbers? How is it?
Okay, so as usual, we are spending more than we are raking in.
Exactly.
Yeah, so government is projecting to spend, you know, we are still in the year, so their projection was 61 billion Ghana cedis.
And we exceeded that.
Right now, we can't tell because the figures are not out yet. The figures are supposed to come from the Ministry of Finance. They are the custodians of data, fiscal data. It's not out yet. So we're looking at a total expenditure of 61 billion Ghana cedis. And it's broken down into different parts. So, for example, compensation of public sector workers is taking a huge chunk
of the budget.
Yes, and then the next one is interest payments, taking a lot of money, and then grants to other government units. You know, so yeah, that's just a snapshot of it. But when the minister comes to the floor of the House on Thursday, we should see more.
Exactly. I was going to say that we eagerly await for the Minister of Finance to come on Thursday to see if actually we have some changes in some of these projections and targets on the budget review. Thanks so much, Philip Namfuri, for joining us. It's a pleasure to have you.
Pleasure here.
So we move on to our interview of the day, and we're still staying on the budget, and the Chief Executive Officer of the National Health Insurance Authority, Dr. Samuel Arnott, wants government to increase the national insurance levy from the current 2.5% to 3.5%. We have this on today's interview of the day.
Come Thursday, really, as the CEO of an NHIA, what are your expectations?
Well, we've discussed with several sections of the community, and we've laid the bare facts as to the fact that you have 11 million people to look after with about 1.2 billion cedis, which translates to each one having 110 cedis for a year. And we know that what we are purchasing with the 110 cedis is we are going out to buy health care for our members. And we also know that healthcare is an international commodity. The doctors, the nurses, the staff, whatever you need to heal somebody, for instance, with a pneumonia, It's the same resources, the funding that you need to heal somebody with pneumonia in Togo and Lagos. So when you want to go to the market to buy a commodity, you have to take the right price in your pocket. The right price, according to World Health Organization guidelines, is that to purchase primary health care, you need about $86 for each person for the whole year. Now, at the moment, with 110 cedis, it only translates to about $25 for each person for a whole year. So obviously, you cannot purchase health with that low level of money. So.
All right.
So that was my interview for the day.
Our interview of the day.
Yeah.
Very important. I mean, crucial for health insurance. Let's see what happens on Thursday when the Finance Minister presents the mid-year budget review. That's it for Business Live tonight. My name is Daryl Kwao.
And my name is Sandra Sanamafeno.
We'll see you same time tomorrow. Thanks for watching.
Good evening.